launch into it before we know it. Let's move on to you, Murray. You've already had a brief introduction. Murray Birt, a senior ESG strategist at the DWS group, which used to be part of Deutsche Bank until a couple of years ago. Also a member of Emilia's organization, I'm thinking. And Murray is also a steering committee member of the Energy Efficiency Financial Institutions group that we heard Peter being affiliated with earlier. So Murray, you also, I guess, you will have some overlap with Emilia, I imagine, in your perspective, where it comes from. But maybe we can zoom in a little bit on, well, a lot has already happened, and what is it? I mean, it's not like building renovations have suddenly appeared as a priority that, you know, we should have thought of 20 years ago. It's been a long time that we've tried to increase the renovates, increase the depth of renovations, and so forth. So what have we been getting wrong? What needs to be done differently than in the past? And the question I'm mostly leading up to is the mortgage portfolio standard. Is that the innovation we've been waiting for, and at least something that could make a real difference?
Thanks very much, Sonia, and thanks for the invitation to speak with you today. Basically, in short, I think it is. An MPS could be a key part of the policy landscape for unlocking investment. So just a further introduction. So I work with DWS. We manage 859 billion euros on behalf of individuals, insurance companies, pension funds, and other institutional clients. We're majority owned by Deutsche Bank, but we're listed on the Frankfurt Stock Exchange as an independent company. On November 1st, we will publish our interim net zero targets as part of the Net Zero Asset Managers Initiative that Emilia mentioned. And my role is to publish reports to advise our clients and our investment professionals. And I really enjoy working with IIGCC and EEFIG on these topics. And while we don't provide mortgages directly to individuals, we invest across a wide range of asset classes, including banks, shares, and bonds. And we also invest in covered bonds and mortgage-backed securities that will have a role in the virtuous circle that Peter mentioned. Other ways that we focus on energy efficiency, including using our investor influence with companies and banks, including working with IIGCC. We own and lend to a variety of commercial real estate and apartment buildings. We manage the European Energy Efficiency Fund for the Commission and the EIB, which lends to municipalities. And last year, our European Private Equity Infrastructure Fund helped establish and own a company that facilitates commercial retrofits. Now, Europe is really in the midst of its third major set of energy efficiency reforms. And despite previous efforts, energy efficiency investment has actually been falling according to the IEA. And this is why we need new types of policies to truly address the multiple barriers of energy efficiency. I commend Peter for his MPS proposal, and I agree with Emilia that it could be a help to unlock investment and attention. I also note that some insurance companies directly provide mortgages to individuals, so an MPS could ensure that all lenders are in scope. And I just have a couple of comments regarding how an MPS could be implemented and other reforms that are necessary. Now, one absolute precondition, I think, is that that member states have to follow existing law and implement an available database of energy performance certificates. Many don't yet have that in place. And this will also support the European Central Bank's climate stress tests that will come in next year. But as Emilia explained, EPCs are not themselves sufficient. And the real estate guidance that I co-led really had at center the Carbon Risk Real Estate Monitor, or CREM project. And this is a set of science-based emission reduction pathways or curves for how the energy intensity and carbon intensity per square meter of different types of buildings in different countries has to change. And I think I've previously stated in other presentations that regulations are more likely to be effective if they use the same metrics that are used by investors and by banks. So if investors are using CREM for their commercial real estate portfolio, I think that banks and policymakers should also be using it for mortgages. The EU buildings taxonomy really needs to be updated to reflect CREM and be linked with these emission reduction curves, because they're much more science-based than the current buildings taxonomy on buildings. I think it could be useful for any MPS policy to also provide guidance for how to deal with historical buildings, because there are many very, very, very old buildings in Europe which we treasure as Europeans. An MPS will only be effective if it's really accompanied by other complementary policies. Requiring banks to integrate energy efficiency into their lending with the ideas that Peter presented, I think would be an excellent start. And in a few weeks' time, an EEFIG working group that I'm a member of will publish an important report with evidence for how energy efficient mortgages can have lower financial risk and higher green property value. And this evidence should be used to reform the Basel capital cost regulations on green mortgages and green mortgage bonds. An MPS and the renovation wave will also basically requires a new type of European supported loan where a portion of the cost of a renovation is only repaid when a building is sold. And that's an policy idea that probably needs its own webinar itself. And perhaps we'll do that in the near future. And finally, I think the renovation wave requires energy utilities to basically be procuring or contracting for energy efficiency. This is starting to happen in the US, and Europe should be adopting and replicating this idea. I wrote about this idea extensively in a report last year, and there's an EU project which is also examining this idea. With natural gas prices having spiked so much, we need to facilitate utility companies procuring heat savings from deep retrofits instead of buying in Russian natural gas and LNG imports. This would create a market incentive or revenue for retrofits and would really complement the requirements of an MPS on banks. So I think that if these ideas together are taken up, then it will really accelerate and expand the number of banks that are focusing on energy efficiency, encourage banks to work more closely with their national governments to create the local policy frameworks and to strengthen their supply chains. And it would really help us get the prize of millions of jobs being created to renovate our buildings to be net zero and much more healthy. So I hope these comments are useful, and I look forward to the discussion.
Thank you very much. One follow-up. What do you see as the biggest challenge to getting an MPS adopted, implemented, used across the board?
I think it's the busyness of all the activities that are going on. There are so many initiatives and policies and regulations and the initiatives within the private sector, and I think that's the biggest difficulty. I think is getting the attention necessary, and I think investors in their engagement with banks have been focusing perhaps more on, for instance, fossil fuel lending rather than on the mortgage portfolios, because it's sort of seen as, oh, we can do that. It'll be easy. It isn't really easy, but it is achievable. But I think an MPS would help raise up energy efficiency, because that's the problem with energy efficiency. It hasn't really been first. It's always been second or third or worse. So I think it would help raise the attention.
Yeah, that's a good point. And I guess indeed, shifting or moving out of gas and coal, these are headline grabbing, they're easy headlines. So in that sense, easy to put first and to also to win goodwill with. So that's I think a fair point. Energy efficiency has always fought to be the first fuel, as the IEA calls it, and to get the necessary attention. Yeah. Partly linked to its often decentralized and fragmented nature. So thank you. Yeah, that's a good point.